Hey guys, how's it going? Back with another episode of 10-Minute Trades. It was requested that I do ARKK, or ARKK is the ticker symbol. If you're not familiar with it, let's just talk about it for a little second, because this is an ETF by Cathie Wood. And, you know, this ETF is made up of rather speculative companies, in my opinion. They're defined by what they call disruptive innovation, and that all makes sense if you look at the stocks that basically make up this ETF. But as we can see in this price graph here, this has been very good for the past few months. I mean, it's pretty much up and to the right, which is what you want to see on a stock or ETF that you want to either hold long term or potentially run the wheel strategy on for options. If I scroll down here, you can see year to date, it's actually up about 42%. The past 6 months is up 60%. Past 5 years, it's up 29%. So very good returns if you just wanted to buy and hold. But let's take a look at the top 10 holdings. So this might explain a little bit of that, because you can see the top holding is Tesla right now, which, I mean, it's rather speculative if you agree or disagree with the valuation of Tesla currently. But long and the short of it is, you know, if Tesla rises, then this ETF is going to rise. And if Tesla drops, then this ETF is going to drop with it as well. But it's 10%. There are other big name tickers that make up this. You can see Square is a little over 6.5%, Roku 5.5%, CRISPR Therapeutics, Zillow, so Slack, LendingTree. So in my opinion, and again, I'm not knocking this ETF at all, but in my opinion, this ETF is made up of somewhat or rather speculative companies, because I feel that some of these companies really could drop in value or maybe get bought out or sold by another company. So it really depends on how aggressive you want to be with your holdings. But for what it's worth, it looks like ARK was recognized by Fund Intelligence during the Mutual Fund Industry and ETF Awards and received an award in 2019 for Active ETF of the Year. So it does look like it has good returns. You know, I will be really curious to see how this fund reacts if we are in a recession or in a depression or really in a bear market, because I think right now tech has been propping up the economy, and this ETF is pretty much based heavily in tech. So we'll have to see what happens, but let's get right into it and do some technical analysis on the stock chart. So here's the trading view chart here. If I zoom out here, again, just reiterates what I kind of told you. Ever since the kind of illness lows back on March 18th, this ticker has taken off like a rocket. Yes, we did have a little bit of a correction early in September as well, like the rest of the market did. But you can see this ETF got hit pretty significantly, right? Because up until then, there was kind of a nice trend line up. But then we have this kind of huge gash down just from 3 red days of trading. We went from about a share price of just shy of $99 to an intraday low of $81 or so in the matter of 3 trading days. So that's what I think. And that's why I say this is probably one of the more volatile ETFs, because it is made up of rather volatile tickers. But you should know that, you know, when you get into it. But long-time viewers know the first thing I like to do is load up some Fibonacci retracements. And I think it would not have been as accurate to draw it from the real lows on March 18th to the recent highs, which was basically the end of the trading day today. We basically hit an all-time high intraday. We basically were over $100 by 2 pennies today. We were unable to close there. We actually closed $1 less at $99, but we'll have to see what happens tomorrow. I'm sure we'll hit an all-time high tomorrow if we have overall green day in the market. The way I drew the Fibonacci level was actually from the recent lows on this September dip here, from September 4th to basically the intraday high on today, which was the all-time high. So the Fibonacci retracements look something like this. And it matches up pretty nicely. If I zoom in here, these are daily candles, so each candle represents 1 day of trading. You can see right here was an area of once resistance and now support. Here, also this Fib level at 38.2% was also initially an area of resistance. Another area here at the 50% Fibonacci level. 78.6 here looked like an area of support in early September, and also here at the end of September on September 24th. So I think these Fib levels actually hold up pretty nicely to the recent price action the past month or so. But let's get right into it and identify some trend lines. So the first line I saw was right here, which lines up pretty closely to this 78.6% Fibonacci level as an area of support. Another line I noticed right here was, again, pretty much right on the 38.2% Fib level at about $93. Keep working here. I think our closest area of support is pretty much going to be the 23.6% Fib level, and basically what I identified as an area of support right now at about $95 to $96. So I could pretty much move this down here and make it in line, and that'll be fine in terms of keeping it in line with this Fib level here. But just keep in mind, if I zoom out, there is not a lot of price data at all in this high area of $80, $90, $100. So we're kind of flying by the seat of our pants here just based on data that we've seen for the past month or two. So it remains to be seen how strong these areas of support and resistance will be and how hard they will hold up. But let's just keep going. I basically drew an area of resistance at the all-time high where we closed today, because you can see this candle also on September 2nd got pretty close to that, pretty much at $99 to $100, which I think is a safe bet because it's an all-time high. Keep working a little bit lower down here. I identified two areas of support lower down here at about $79 and then further down at about $69. But again, this Fib level right here is right at 70, so this is probably closer to 69.70. If I zoom out, it's because here on mid to end of June, there was some support here for a few trading days at this price level. And then again at about $79 for a few days in mid-July. And then again in end of July, looks like it was acting as support for a few candles here. So we'll have to wait and see. But right now, I am feeling like there will be a little bit of a pullback on ARKK because I think it is a little bit overbought. It's creeping up there on the RSI curve in terms of overbought category. But another reason I say that is, so I drew a trend line here because right now it's up and to the right ever since the beginning of September. So that trend line looks something like this. And as we can see, it trades pretty close to the trend line. Whenever it gets a little bit far away, like it did on September 16th, we pretty much quickly pull back closer to the trend line. So again, today, I think we're kind of pulling away from this trend line. So I would expect a little bit of a pullback in the next trading day or two to kind of get closer to this trend line. Probably bounce off support at about $95, $96. Now, I can also draw a parallel channel like so, which pretty much mimics this trend line. But again, if I can include the majority of these candles in this parallel channel, again, you see this candle here today where we closed is outside the trading range for the past month or so, just like it was on September 15th and 16th, and then we pulled back. So I think, especially if we're going to call the all-time high as an area of resistance, I think tomorrow and probably the next day as well, we'll have a little bit of a pullback, probably closer down to $95. But I think overall, kind of short to mid-term, it does look like we're on an upward trend. Also, this orange line here represents the 21-day moving average. The pink line represents the 50-day moving average. If I zoom in here, we are awfully far away from where we closed today from both moving averages. As you can see, if I scroll back out, you know, ARKK stays pretty close to the 21-day moving average, and every time it bounces off it, dipped below it, but probably came back up, bounced off it. We broke below it on September 2nd, kind of came back up. We finally really broke above it on September 28th. So again, I think with time, I think there'll be a little bit of a pullback, probably, if I had to guess, something like this, and then maybe we'll bounce off this area of support and continue upward like that. But we'll have to wait and see. I mean, the scary thing would be if instead of that, we basically bounce down like this a little bit further, because I assume that this 21-day moving average is going to kind of creep up to somewhere around here, around the low 90s. So we'll have to wait and see, you know, how low or how hard this pullback will be. But that's my 10-minute technical analysis on ARKK. Let me know in the comments below if you agree or disagree. Let me know if you've owned shares of this ETF or if you've ever traded options on it. I personally have never traded it, but I have been familiar with it for a few months now. As always, if you have any questions or comments, leave them below, and happy trading.